Good morning, man. If you're watching this from the Pacific Coast at 5:15 a.m., I got to give it to you. This is a very, very early morning, and I'm sure most of you guys watching this live, it's going to be either on the Central Time or the Eastern Time. But either way, man, this is a very early morning, and I just got back from St. Louis last night, like very late, like 10:30 p.m. last night. So, but I am dedicated to look at this because this is it's been a while since we had a what do you call that? A FOMC meeting and a CPI release on the same day. And I think it's only 12 or 13 times. I think that's what Yahoo Finance said has happened since 2008, 2009. But anyway, this is going to be a very juicy live stream, and we're going to be live again later on. So with that said, welcome to the special live stream session with the release of the Consumer Price Index, or the latest inflation data for the month of May 2024, which is set to be released in about 14 minutes. And I have Bloomberg on live TV ready to go. And when it happens, and I'm super fired up because I'm going to have double live streams today with the new inflation report happening in this live stream. And then later on today at 11 a.m. Pacific Standard Time or 2 p.m. Eastern Standard Time, the Federal Reserve is going to make its decision on whether they'll raise interest rates, keep the rate steady, or maybe surprise us with a rate cut. Doubtful. But at the same time, they're also going to release the summary of economic projections, which will give us a better idea of how many rate cuts they're looking to do for the remainder of 2024. Are they going to cut the rates once or maybe twice? Or are they looking to cut rates in every meeting in July, September, November, and December? And Jerome Powell is going to be addressing the press conference, or they're going to be addressing the nation sort of at 11:30 a.m. or 2:30 p.m. Eastern Standard Time when the stock market is still open. So I'm going to be live again at 10:30 or 1:30 p.m. Eastern Standard Time. So be sure to subscribe if you haven't done that already. I want you to take a look at this because the Federal Reserve has not raised interest rates since July 26, 2023, which maintained the Fed funds rate between 5.25 and 5.5%. But we're starting to see the U.S. economy lose some momentum going into the second half of 2024. The latest PCE came in at 2.8% year over year, while the Q1 GDP came in a lot lower than expected at 1.3% from the earlier estimate of 1.6% due to a due to a decline in consumption. And several economists are already saying that there are already early signs of a potential recession going into Q3 and Q4 of 2024 and then in 2025. Let me know what your thoughts are in the comment section down below if we're going to have a recession in 2024. I personally don't see it happening this year, but things could change rapidly if the interest rates stay high at 5.25 to 5.5. But we're also seeing a big pullback from the companies that only focus on discretionary goods and services like Starbucks, Etsy, and McDonald's. And I stopped going to Starbucks a long time ago because they've been overpriced for many years, and they're just now getting people's attention with their out of control prices. And I also stopped going to McDonald's because their prices are just out of control now. And I would spend maybe over $12 just for 2 sandwiches and French fries. And just imagine how many more people are thinking the same way about these companies that use the excuse of inflation to price gouge their customers. And let's face it, these companies are price gouging us consumers because if you look at their profit margins, they're going up year over year. And I'm not at all surprised that people have stopped eating at these overpriced restaurants nowadays. But if you pay attention to how our consumers behave, discretionary spending is the first thing they're going to cut from their budget when they start to feel the squeeze, right? If I lose my job or I get a pay cut for whatever reason, the first thing I'm going to cut is all of my discretionary spending before I cut anything that's non-discretionary. So now the Fed needs to pay more attention to not just inflation, but also the GDP and unemployment rate going forward. And let's dive a little bit deeper into the second estimate of the Q1 GDP. The second estimate of the GDP was released about 2 weeks ago. And if you were on my previous live stream, the original estimate was a 1.6% annualized rate versus 2.4% after growing at a 3.4% rate in the fourth quarter of 2023. But the second estimate came in even lower at 1.3% versus 1.6% in the previous estimate. So the Bureau of Economic Analysis said that the revision was due to lower consumer spending. So personal consumption in the first quarter grew by 2%, down from the prior reading of 2.5%. That is significant. And if you look at the chart here, scroll down here. Okay, let me zoom in. Q3 2023 came in at 4.9%, and Q4 came in at 3.4%. And now the Q1 2024 came in at 1.3%, which clearly shows a weaker GDP if you compare it with the two previous quarters. And we haven't seen a recession since Q1 and Q2 of 2022, if you look at the middle chart here. But that was a very weak recession that lasted for 2 quarters. And the government even said that that wasn't a recession, but that was clearly a recession nonetheless. They can't just change the definition of a recession just because they feel like it. But anyway, this GDP reading came in at the lowest since we had that recession in 2022. Does that mean Q2 will be lower or higher? We're not going to know until July 25th when we get the advanced estimate for the Q2 GDP. However, the U.S. manufacturing sector is still contracting, and that is due to a decline in demand, labor shortages, and inventory buildups. And I hate to sound bearish, but if the manufacturing sector continues to contract, the rest of the economy could fall into a recession or at least a slowdown. The Fed knows that the inflation measures have been cooling since 2022. So I wonder if Jerome Powell will still say that the economy is still strong and in a good place while we're all seeing these warning signs flashing red with the interest rates remaining high. The New York Fed economists even said that they're seeing a 52% chance the economy could slip into a recession within the next 12 months. And I'm sure the reporters will ask Jerome Powell at the press conference tomorrow, today, if he's concerned at all about the lower GDP and potentially higher unemployment rate going into the second half of 2024. So today's second live stream is going to be even more juicy with Jerome Powell's press conference later on. So be sure to stay tuned or try to get that notification if you can. Okay. And speaking of unemployment, unemployment data was just released on Friday, and it's pretty clear that small businesses have been struggling for a while with the high interest rate economy. You have to remember that these large corporations don't build our economy. It's these small businesses. Small businesses account for about 44% of the US's GDP and about 47% of private sector employment. And they also make up about 64% of job creation in the entire country. And I'm a business owner, so I'm always aware of my balance sheet and income statements to make sure that my business can survive in a recession. And if you remember how it was in 2008 and 2009, it's either you make it or you don't make it. It was pretty simple. And companies with a better balance sheet always wins. My business, for example, has no debt at all. If we go through a recession, I have a significant drop in revenue, I have cash or cash equivalent assets to weather the storm for a while. And if you're interested in hearing more about how to start a business, just leave me a comment down below and I'll probably make a video about it in the future. But anyway, the jobs report came in a lot hotter than expected, but the unemployment rate did come in at 4%, like I expected from my last live stream. The non-farm payrolls expanded by 272,000 jobs, up from 165,000 in April and ahead of the consensus estimate for 190,000, mostly in healthcare, government, and leisure and hospitality. And the labor participation rate also decreased to 62.5%. So the jobs report came in hotter, but we got a bigger drop in a what do you call it, household employment. So we're still seeing some weakness in the jobs report. Nonetheless, the Federal Reserve is going to look at this as a hot jobs report and most likely going to keep the interest rate steady anyway at 5.25 to 5.5%. And take a look at where all the jobs went for the month of May. Healthcare and social assistance continue to increase. And this time, there were about 83,500 jobs. The Bureau of Labor Statistics even said that the healthcare jobs are expected to grow by 13% from now until 2031, which is much faster than the average for all occupations. By 2030, 20% of the US population will be 65 or older, and that's going to outnumber the number of children we have in the US. That's crazy to even just think about it, right? The aging population is going to put a high demand on healthcare and social assistance services. And I've been pretty bullish on the healthcare sector. So that's a part of my FIRE portfolio to grow year over year. And on top of the aging population, there are many healthcare workers who plan to retire or exit the labor force due to the high demand for healthcare workers. And I'm expecting this sector to continue to grow in the coming months and coming years. And the other one is the government sector, which is another job sector that I've been talking about in every live stream, because this is a non-cyclical area that continues to grow, especially with the IRS, the VA, or even the construction sector at the state level. But the leisure and hospitality sector is considered cyclical. So if we see any weaknesses in the jobs data, that sector will be one of the sectors we'll see significantly decrease. If it doesn't decrease at all, then the Fed will most likely keep the interest rate steady until they see a weakness in the cyclical sectors. And we'll see what happens going into the second half of 2024. And if you look at the CME watch tool here for the rates, as you can see here, they're counting on 95.3% chance that the Federal Reserve is going to maintain the interest rates at where it is now. The summary of economic projections, that's going to give us a better idea of how many times the Fed is looking to cut rates for the remainder of 2024. The Fed is really stubborn about the 2% inflation target rate, but this country cannot afford a recession right now. A recession would trigger the Fed to cut rates and print more money to stimulate the economy. Now, we're already trillions of dollars in debt, right? And a recession is just going to increase the level of debt and reduce government revenue at the same time. And now, if you look at July, they're counting on 99.4% chance that, I'm sorry, that's June. So June is 99.4%. So if you look at July, they're looking at 91% chance that they're going to keep the rates steady. And then so investors are betting on September to possibly cut rates, and there's a 50% chance of cutting rates. And in November, there's a 48% chance of cutting rates by 25 basis points. And then by December, they're looking at cutting more rates. So it looks like the CME group is betting on 2 rate cuts for the remainder of 2024. I could see that. The worst case scenario is they're not cutting any rates at all for the remainder of 2024 because of how the Fed is with their inflation target rate. But anyway, this is going to be very interesting. We're going to listen to what Jerome Powell is going to say at the press conference later on in the live stream. So let me go ahead and pull up Bloomberg here as we get ready to find out the CPI results. So, Attorney Aviator, hello from New York. Hey, always good to have you in here. Appreciate you. So let me go ahead and pull up Bloomberg here. Make sure I have the sound.
Record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow. And these things grow the overall industry. And
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
The whole trading week has been building up to this. CPI data due in about 20 seconds' time. Equity futures on the S&P 500 going into that data positive by 0.1%. Similar move on the Nasdaq, up by 0.15. The scores in the bond market, 2-year, 10-year, 30-year, look like this. Yields lower by a single basis point at the front end of the curve at 482.13. With the economic data, here's Mike McKee. Good morning, Michael.
Good morning, John. Looks like further additional progress for the Fed. We'll have to get the data from Jay Powell later, but the CPI comes in up not at all, flat for the headline number. The forecast was for a tenth. That's after 0.3 last month. The core comes in up 0.2, which is lower than the 0.3 that was anticipated. That puts the year-over-year numbers at 3.3% for the headline, down a tenth from 3.4 last month, and 3.4% for the core on a year-over-year basis. That's 0.2 lower than 3.6 last month. So all in all, the headline numbers are pretty good. Let's take a look at what we're seeing in terms of some of the major categories here. Food up just a tenth. Food at home, which has been sort of a campaign issue out there, 0.0. So flat for food. For energy, energy overall down 2%. Gasoline prices down 3.6%. And natural gas down 0.8%. So good news there. New cars prices down 0.5%. A lot of focus on used cars, which were up 0.6%. But new cars have double the weighting in the CPI of used cars. So that's a significant drop. Motor vehicle insurance, which has been rising and has been huge, goes down 0.1%. And then for shelter, up 0.4%. Rent of primary residence up 0.4, no change there. Owner's equivalent rent up 0.4. So the rent sides stay about where they have been for the last few months. No real progress there. The one thing I will say is if you look back to what Chris Waller was saying a couple of weeks ago, he has to look out to 3 digits to see what the real changes are in the CPI. And so we'll look for those as well.
Mike, stay close. Let's get
so
to it.
CPI
It is the most important number
so it's
in
not that
international
impressive.
finance.
I'm gonna
And
pull
right
up
now,
the
this is
PDF
the
so
right
that,
kind of
can
downside
get the
surprise.
breakdown.
Equity futures positive by 0.8%. On the Nasdaq 100 up by 1 full percentage point. Check out the Russell, and then I'll give you the why. The small caps up by 2.3%. Here's the why. Switch up the board and turn the page and get to the bond market. The 2-year yield absolutely ripping. Yields down by 14 basis points at the front end of the curve, 4.69. We haven't seen 5% at the front end of the curve since the Fed last met on the first day of May. We have backed away and we're backing away again. We're down 13 on 10s to 427. On 30s, we're down 10 to 443.89. Switch up the board and get to foreign exchange. You can guess what the dollar's doing. The euro is stronger against the weaker dollar. We're back through 108, 108.22, and positive by 0.75%. Lisa, stocks are up, yields are lower, the dollar's weaker. That's the right kind of downside surprise.
So now on to Act 2. How does Jay Powell interpret this? This is basically going to be opening the door to a July rate cut once again, because guess what? We're even closer to our goal. Looking forward, I think the reaction is fascinating in terms of what the connection is between the rate market and the stock market. It doesn't totally make sense that you see an outperformance of, say, tech stocks in addition to the Russell 2000. And there are some people who argue that that rate cuts won't benefit small caps as much as some other sectors. A lot of uncertainties as we carry through. You've always said first reaction isn't the way we're going to end the day. And that certainly could be the case today. However, the right kind of downside surprise definitely making its way to a pivot party once again.
We'll see if it sticks. This is the first part of a 2-part story. The next part is at 2 p.m. Eastern time when we get the Fed decision and forecast. 30 minutes after that, get a news conference with Chairman Powell. If you are just joining us, 0% month over month headline CPI. 0.1% was the estimate. Previous month was 0.3. Core, stripping out food and energy. In our survey, we were looking for 0.3. We got 0.2. Michael McKee's been pouring over the numbers over the last 4 minutes or so. Mike, what jumps out for you now?
Well, one of the things, of course, that the Fed has been looking at is supercore, which is services less energy. And supercore comes in much lower than it has been at this point. It is up just 0.4% for a month-over-month basis, and on a year-over-year basis, we're up 4.8%. That's down only fractionally. So there's still some inflation on the services side that the Fed is looking at, but some of the services things that we have been worried about, like airfares, have not gone up. As a matter of fact, airline fares down 3.6%. Your surveillance co-anchor Anne Marie probably got a discount on her trip to the G7. So that's good news.
So, Mike, can you give us a sense, as you're a Fed watcher and an econ watcher, how you think this is going to filter into what we hear later today?
Well, I think it's going to probably reinforce what most of the officials came into the meeting with, the idea that inflation is going to continue to fall. They may not have put the exact numbers on it, but I don't think this changes anything in terms of anybody's view of how many cuts they're going to put into their dot plot. It does make the idea of changing their forecast for the PCE, and remember, CPI runs a number of basis points above PCE, but changing that forecast, revising it up, maybe that makes it a little bit more difficult. But it's an interesting question for Jim Bullard because he's been in that room. It's rare that we get data this important on the day of a Fed meeting, but I know they can change their views for the SEP and the dots up until about mid-morning.
Jim Bullard, the stage is yours. The floor is yours. What would you do after that print?
I think this was good news for the committee. They've been looking for a softer report. They got it here, but the typical reaction would be, okay, this is good, but this is 1 month's numbers. We would need more news going in this direction in order to forge ahead with our easing policy. So I think that will be the baseline reaction. But it does keep hope alive for those that have been looking for an earlier rate cut.
You think the door is open for July?
No, I don't. I think the best you could do with July is set up a possible move in September, and you'll have more data by the time you get there.
Yeah, it looks like that's pretty accurate. So, man, just falling asleep listening to him talk, not trying to be rude here. But yeah, so the CPI did come in pretty good. Just let me go ahead and share the screen here, and then you guys can see what the inflation report actually says. But yeah, right now, investors, including myself, we're looking at September rate cuts. But like he said, I don't think the rate cuts are going to happen in July, because between now until the next Federal Reserve meeting, there's only going to be one inflation report going forward. So today's data came in pretty good, right? It looks good. But then, Jerome Powell at the press conference today, later on at 2:30 p.m. Eastern Standard Time, he's going to argue that, oh, this is one good data. I'm going to need to see more. So the next inflation report that comes out next month, or the month of June, if it starts to see the trend down, then they could say, oh, all right, let's get ready for the rate cuts. But are they going to cut the rates in July? Probably not, right? So they're going to get more inflation CPI reports coming out between now until the next meeting in September. I'm going to pull up the calendar later on, but we're going to have more data coming out before the September meeting. Then they could say, all right, let's cut the rates by 25 basis points or maybe 50. And we're going to see the dot plots later on. That's what they were talking about on Bloomberg just now, is how many governors or how many FOMC participants are feeling like where the Fed funds rate should be for the remainder of 2024. And then we're going to have a better idea of how many rate cuts they're going to do for 2024, and maybe how many rate cuts they're going to do in 2025. But anyway, so the CPI headline came in 3.3%, which is a beat for three. When I say beat, that means that it came in lower than expected. And I'm going to look at the just the breakdown here, and I'm going to use the highlighter so you guys can see that better. Figured it out the other day how to do it on the PDF. But food away from home, food at home came in flat here at point. Let's see. Can you see that? Okay, about point. There we go. 0.0%. That would be month over month. So right now it's about 2.1% year over year, and then for food away from home had a flat line also at 0.0% or 0.4%. and then it's still increasing by 4.0%. And energy came down really significantly. So let me go and zoom in here. If you guys can see that on the magnifier, it's about -2%. And then we were kind of all expecting that because the gasoline prices have been coming down. And it's come down about actually says -3.5% for the gasoline. And then for fuel oil, also came down by -3.6%. So that is a good contributor to the inflation report. And then for energy services, came down -0.4 and then -0.2. So kind of going down the line here. Let me see if I can zoom in a little bit more. And if you guys need to see it a little bit better on your YouTube device or whatever the device that you're watching this YouTube on, you can just pinch on the screen and zoom in and then just revert to the original size when you're done looking at it. So I'm going to try not to zoom in and zoom out as much as I can. Okay. So energy came down significantly. Let's take a look at commodities. Okay, so that's about flat here. So new vehicles continue to decrease. So from month over month, it's decreased by -0.5%. So that is a significant decrease just month over month. But the used vehicles did go back up to 0.6% here. Okay, and then the new vehicles came down by -0.5%, and the used vehicles have been coming down. And it's actually in a deflationary status right now at -9.3% year over year. I know a lot of people are like, "Oh, used vehicles are still expensive." Completely agree. With the rates being high, this is still considered it's still considered expensive to buy a used car. But generally speaking, the inventory is up in the car dealership. If you go to any dealerships right now, they have a lot of vehicles in their inventory, and they're not selling as many vehicles as they would like. So you can see that the prices have started to come down. And if you look at apparel, it looks like apparel did come down. So apparel will be your clothes. Medical care commodities continue to go up, and this is a significant increase for medical care. It looks like it's 1.3% in just 1 month. Let's take a look here. For shelter, has increased by 0.4%. And the year over year increase for shelter is 5.4%. So shelter is still a concern for the Fed because it is a very significant contributing factor to how inflation rises. So 0.4%. And then transportation services, look at that. Transportation services came down by 0.5%. That is actually very exciting because if you take a look at that's the second line from the bottom, it's been increasing by a lot, 1%, 0.1, 1%, 1.4, 1.5, and 0.9, right? Now this is a deflationary indication, somewhat just month over month. I would like to see what that's going to look like in the next month and see what happens, because that's actually a good indication, because every time I go live for the CPI results, this has been showing increase. That's month over month, 1.4%, right? Medical care services is still going up. Okay, so let me go ahead and read the fine line here. So food has been a problem, and that's what people are complaining about, is how expensive food has got, and that's why a lot of even people living in the cities or people just in general are struggling to buy groceries or put food on the table, because the grocery prices have gone up significantly. And it looks like meats have decreased 0.7% in April. Food away from home index rose 0.4%. I just talked about that. Okay. Now, oops, didn't mean to highlight that. The food at home index rose 1% over the last 12 months. Let's see here. Energy fell 2% decrease for energy. And then all items, less food and energy. So core, yeah, we talked about that. So it's 0.2% here month over month, which is good. And shelter index increased 0.4%. And it still says it is the largest factor in the monthly increase in the index for all items, less food and energy. So that's something that Jerome Powell and the Fed, they're going to talk about that at the press conference later on. The used cars and trucks rose by 0.6%. Okay. And index for airline fares fell 3.6%. I just traveled last night, really, really late last night, and the flight was half empty coming from St. Louis to Vegas. So, but that's just my perspective from one flight. I know some of the flights have been completely full. Just kind of depends on when people are traveling, where people are going. And if you guys didn't know, I'm based out of Vegas. I live in Vegas. So if I want to keep track of how the economy's going, I could just go to the strip and look at the strip and see how crowded it is, right? So but anyway, airline fares fell 3.6%. And then the new vehicles fell 0.5%, which is good. I do want to look at car insurance because that is one thing that has been. Oh, wow. Okay. So car insurance did go down. I do want to take a look and see what's going on there. But the motor vehicle insurance is up 20 points. Yeah. If you take a look at your vehicle insurance bill, it's up 20% year over year. Mine personally, that I track my own stuff, that's up over 24% year over year. And I'm going to get my new insurance bill in August. So I'm going to find out more about that. So, if they increase another price on me, I'm going to have to switch to somebody else. But yep, just something else I do want to scroll down and take a look here. Okay, so CPI, that is the summary of it. So let me go ahead and scroll down. I usually start from the bottom here. And if you want to get a copy of this, you can just type in the Google search, and just type in CPI report. And then it's going to tell you what the month over month increase is. Okay, let me go and take a look here. I think it's around here. Nope, it is not. Okay, let me scroll up more. I was going to look at the vehicle insurance. Okay, so transportation did go down quite significantly. Make sure I'm on the right page here. Okay. So meats have come down, eggs, milk, and these are all the specific items that you can look at. You can really nerd this out and find out what's really in it. Let's take a look. So energy has come down. I can't find where is. Let me see. Should be on the on this page around there. Okay. Should be somewhere around vehicles. I'm gonna have to keep looking. Maybe I'm just going too fast. Medical care. Oh, there we go. Motor vehicle is the nearest motor vehicle. And I just saw it. Motor vehicle insurance. So yeah, it's up 20.3% year over year. So I found that. So let me go back to the month over month increase. Should be up here. There aren't that many pages. This is like 38 pages that you can scroll through it and just kind of take a look if you want to. That's just me kind of nerding out, right? But I do want to pay attention to what the economy is doing. So there we go. Motor vehicle insurance, not much, negative 0.1. That's month over month numbers. So that's from April 2024 to May 2024, decreased by negative 0.1, which is good news because that this number has been going up every single month. So that is a good sign. Well, depends on how you want to look at it, but yeah, paying a lot of money on car insurance in Vegas because our accident rate is so high. It's just ridiculous. Let me take a look here. That is the month over month. So negative 0.1. And let's see, what was the other one that I wanted to look at? Airline fares is down negative 3.6. Yeah, just kind of like, I don't know how much you guys watching this like to travel, but the I think Southwest Airlines, that's one of the airlines that reduced the prices significantly. But if you're going international, I don't know if CPI actually breaks down. I don't think it does, but international flights are still somewhat expensive, kind of depending on where you fly to. Let's see. Lease vehicles. Well, subscription and rental of video game and gamers. It's down negative 3.9% month over month. Interesting. I'm just looking for something that is showing or a significant decrease. Food and beverage apparel negative 1.2. Oh, that's non-durable. Okay. Photography negative 1.7. Okay. If you want to get into the photography business, this is really interesting right here. Negative 1.1. Remember, I was just telling you guys about this. The transportation has been going up every single month. It's actually really frustrating to see that. But this is the biggest decrease I have seen probably in the last year and a half, maybe 2 years. So I would like to know what's going on more about that. Utilities and public transportation went down as well. Wow, interesting. Okay. Personal care is down. Okay, so let me scroll back up and make sure that I didn't miss anything else here. Tobacco, 1.6. Don't smoke. It's bad for you. It's gone up 1.6%. So, let's see here. Well, computer software and accessories have gone down negative 3.9%. Anybody watch that WWDC on Apple, what they're releasing? The one thing that I'm kind of frustrated that Apple hasn't released is the scheduled text messages. I don't know why we can't do that yet. Like, I want to schedule a text message and just say, all right, at 7 a.m., schedule a text message to this person and say whatever, it would be so much easier. And if you haven't got your my financial independence resources, go to firesightchat.com/resources to get everything for free. They're all downloadable PDFs and Excels that you can use to calculate your retirement, calculate your financial independence number and all that. That's all on there. Let's see. Information technology commodities have calmed down. Interesting. School stuff has come down a lot. Well, obviously, those school's out. Duh. Negative 1% for recreational. Let me see. Is there anything else that is? Wow. Video equipment. If you want to become a photographer or videographer, I think now's a good time to do it. The equipment costs have come down significantly. Let's see. Watches and jewelry. Infants and toddlers apparel come down negative 2.2%. Good. Man. I just can't believe how much money I spent on my daughter's clothes when she was a baby. She grew up so fast too, and I just kind of wish I didn't spend that much money on the baby clothes. That was a long time ago. I didn't just have a baby, but that was a long time ago. Okay, so apparel, clothes are coming down. Prices, wow. Women's outerwear came down negative 3.5%. That's interesting. It's summertime. So let's see. Great. Men's suits, sport coats, and outerwear increased by 3%. Interesting. Dishes came down by negative 3.2. Window coverings, negative 3.3. Okay. Gasoline. All right. Okay. Interesting. Energy commodities continue to come down negative 3.5. Ooh, what is this? Condiments. Condiments are down 6% in 1 month. Wow. Interesting. Negative 2.1%. So commodities are coming down. Oh no. If you're a peanut butter fan, it's up 2.6% in just 1 month. Or butter. Eat more butter, I guess. It's down negative 1.1%. Okay. Carbonated drinks. This is an interesting one because sodas have been going up for a bit, but it's been coming down for the last couple months too. So that's one thing that I do not drink or try not to drink is soda. A couple of things I gave up in my life is giving up Starbucks coffee. I used to drink Starbucks probably every single day. Not every single day, probably 5 days a week. And I was spending so much money. This was way back in like 2015, 2014. I have not had I drink my own coffee now, but I don't spend money on coffee like that anymore. Canned vegetables came down by negative 1.5. Okay. So things are coming down. If you look at the report in general, things are coming down quite significantly in some areas, which is good news for the consumers. Okay. Ham, wow, negative 1.1. Good time to buy beef roast, negative 2.6. And maybe go easy on the biscuits. It's up 2.6. Oops. I'm going to do that. Oh, good time to buy some rice and pasta. It's down negative 1.6. Interesting. Okay. So, yeah, you can go to obviously the website, take a look at it, and it looks like the inflation looks good. Does that mean that the Fed is going to cut rates today? No, probably not. Almost no. I would say 99% no. You know what? I forgot to show you guys that the CME watch group, and let's see what it says. It says, let me refresh that real quick. Yep. 99.9% chance that they're going to cut the rate, keep the rate steady. So the Fed meeting today, what we're going to pay attention to is what Jerome Powell is going to say about the inflation report that was released this morning. And I want to see what he's going to say, respond to the unemployment rate going up and the weaker GDP for Q1. And we're going to get the third estimate for the Q1 GDP on June 24th. And if that comes in even lower, that could signal the Fed and say, whoa, we might need to cut the rates a little bit sooner. But when I say sooner, I think it's going to be September. Because if you look at July, I'm pretty sure they're already priced in. Okay, they kind of made the changes, but these charts are going to change nonetheless. I don't think they're going to cut the rates in July 31st. Here's the main reason why. We have the inflation. Let me see if I can find the schedule. There's a schedule. Nope, wrong one. Oops. What the heck happened here? Sorry, wrong keyboard. The CPI release dates 2024. Okay, so sorry about that. Pressed the wrong keyboard here. So the CPI numbers came out today. So this is what we got, right? So June 12th. Next one is July 11. So that's going to be 20 days before the Fed meeting on July 31st. And then we're going to have August 14th and September 11th. That's when the CPI report comes out. Now, if you go back to the CME tool, September 18th is going to be the next Fed meeting after July 31st. So September 18th, we're going to have 1, 2, 3 more inflation reports that are going to give them a better idea of, all right, is the data trending down like this, or is the data kind of doing doing the wavering, right? So it's going to be pretty interesting. But they could also say, you know what, it's not good enough, and they end up just kind of waiting until November 7th and to cut rates at all, or they wait all the way till December, which is going to be way after the election day. So, and they're going to cut the rates down to maybe 50 basis points at one point, or maybe they don't cut at all. There's been a lot of talk about that they might not even cut the rates for the rest of 2024. That's a possibility. So we'll see. And I'm gonna have more of a breakdown later on. Just let me know, and we'll see what happens. Right. So I'm gonna be live streaming again later on, just at 10:30, or what time is that on East Coast time? It'll be at 1:30 p.m. Eastern Standard Time. So be sure to subscribe if you haven't done already, and otherwise, we're gonna see you guys later.